Hey all, Tom Weller here from forexreviews.info. In this video, this is actually part 3 to how to create the price action trader's mindset. And in this video, this is like a really big one for you guys actually. This video is going to be about identifying trends, like eyeing off trends with the eye. And I'm going to show you guys how to see it. This is really important part of trading. It's based on looking for structure. Now, it's not just about support and resistance, and you're going to see what I'm talking about. It's about trend trading. It's about knowing and predicting where the market's going to go in order to buy in an uptrend. And it's also going to be about knowing where to sell in a downtrend. And it's also going to be about knowing overextended areas in order to know where to take counter trend trades as well. And this is really one of the key aspects of Forex, and so many traders have problems with this. I'm going to show you an example of this just to show the most average trader's mindset. Okay, so we're on the Euro US. Okay, so this is the Euro US pair. I'm just on the 4-hour here. Now, what a lot of traders do, and I'm going to show you this, and this is a common problem with which a lot of traders do. And this is probably going to, and if you are this sort of trader, then yeah, feel free to comment your thought below. You know, we all do it. We all do it as we learn how to trade. And, you know, it's a very common problem that people have. Okay, so I'm just going to show you. Okay, right. So you'll get a big move like this, right, in the Forex market, like something like this, like crazy, like all the way up to 131.14 or whatever. And this is where most people in the Forex market will go long, up in this top area. I'm not kidding you. This is based on most brokers' statistics. This statistic has been researched. It's been analyzed many times. Most people go long at the highs, and most people go short at the lows. Now, if you're the sort of person that feels like, okay, the market starts moving down, you feel like you need to get in on the trend, then you need to get in on the movement down. It's like a feeling. Then this video is perfect for you because you're doing it wrong. And this is going to be costing your account a lot of money, right? As you can see here, this is actually a structure zone, okay? So what did the market do after it got here? If you border up around this area, you would have been actually stopped out, okay? Probably down around here, risking about 30 or 40 pips, okay? Right? But is this an uptrend? Yes, it is an uptrend on the Euro US. So, okay, let's have a look and see where this price bounced. See it bounced here around 131.70. Okay. Now, if we look to the left, right? Okay, this sort of circumstance is not the usual sort of circumstance, but if you drew it back on the daily, you'll see in the past this was a structure area here. So what I'll do is I'll actually just show you the ones that are really obvious in the Forex market and what the market usually does. Okay, so I'm on the Euro US. I'm just going to show you when this pair, let's have a look. Okay, so this is really for people that need to know how to understand structure, know where the market's most likely going to come back to, and you know, etc. So let's have a look at the Euro US. Okay, so from this price, we have the formations. Well, this was all a downtrend up to this point, guys. So I'll show you that in a minute. But right, so the market's moving like this, right? And see how we got a higher high here and a higher low. So let me mark them in. HL for high low, guys. And when you get this, right, you wouldn't be able to see the future, right? When this is a current price, you have the consensus to say this is an uptrend. We've broken above this previous high, and we've also bounced a bit higher than the previous low, right? So it's not surprising that we had a price bounce here all the way back to here, right? Now, if we look left on this pair, okay, so this is another high low, By the way, the beginning of this was a bit of consolidation, right? So that was a high low, right? So we've got a confirmed high low. It's higher than this, right, guys? And we had this area. So if we now draw in a line, and it doesn't always do it, but if you draw in a line, most of the time price will tend to pull back to the previous high area before it bounces. So let's go through and actually look at where it actually does that. Okay. All right. So it didn't manage to pull back here. This is a strong uptrend, by the way. Oh, here we go. Here's an example. All right. Look to the left. All right. Price bounced down. Price bounced and then came back and bounced off the highs. So it broke above. So when price breaks above structure, all right, and like it's not going to do it. It's not going to pull back the whole way every single time. All right. But when price breaks above structure in an uptrend, right? So this is the top, and then we broke above. What does it normally do? It comes back and bounces off the tops of structure, right? And so where does the buy? Where would we want to buy? Around here in an uptrend. Boom. Okay. So these higher lows are good buying opportunities in an uptrend. Now you're probably wondering, and also, you know, when most, like I said to you, as we mentioned before in the just near the beginning, is most buyers actually buy as it's up the top here. Oh, they feel like, and let me know, like, comment below if you relate to this. You feel like you're missing out on the big move. You're like, oh, the market's moving, and you place a buy trade, and then all of a sudden the market starts to retrace. You've got to always wait for the retrace, guys. Trust me, it's good for risk reward. Now I'll give you an example of why it's good for risk reward. So this is a high low, bounced off the tops here, and I'm going to go through many examples in a second. So high low, right, showing the uptrend. Okay, let's look at this. Your risk would be just below the previous low, right? Entry here in this pink zone, in this I've just highlighted in pink this area. Your stop would be here, about 35 pips, and your reward would be the next high, right? Or current high, which is 47 pips, right? So it's an uptrend, so you're expecting it to move higher. 80 pips you could have gotten on this. And where would you lock in your break even? And where would you take your first trade off? Say you opened up two positions, all right? Two half-size positions. Where will you take your first trade off? At the previous high, which is 44 pips, right? Bit over 1-to-1, around 40 pips, or pretty much exactly 1-to-1. Oh no, it's a bit more than 1-to-1. And the next target, your next trade that you would lock in at break even here, you take to the next target, which is up here. Okay? So you're always looking at these impulse legs. They're called impulse legs. And what do I mean by impulse legs? It's a leg which is breaking above the high. Okay? You're waiting for the pullback to get in on the trend. Okay, now this is not perfect, so you wouldn't have gotten a trade here. Why it didn't pull back to here? You've got to wait for the pullbacks, right? And so it doesn't always do it. Let's have a look at this. Impulse high, right? Breaks the highs, right? We get a pullback. Look to the left, and it's around that area. Okay? And then the price moves higher. And price will tend to keep doing this over and over and over again. And occasionally we get these, what do they call them? Occasionally we get these consolidation zones where the market just sort of ranges up and down. And I've showed you guys how to trade this. You just trade this as double bottoms and zones. Like we didn't get a press up. See how we didn't break above this high really? You need a good break above the high, and then you'll come back and it'll retest it as a high. So this is like a consolidation sort of trade as we moved up along here. Okay, so here we did get a break of the highs on this trade. So we would have been expecting a buy trade around here. But did we get one? No, because we're not 100% right every single time. We would have expected a buy around here, about in the 131.40, the 131.14 area, and we didn't get it. Okay, so that happens sometimes. We did come back down to the previous low, And these are the sort of ways you've got to look at the market. The market's always creating these higher lows or lower highs. Uptrends, that's what it is. Higher highs, higher lows. Uptrend, and the pullbacks in those sort of situations. The pullback's always going to be to the broken resistance area generally, and then it'll press higher. It's where the buyers get more energy. Okay, and so as we can see, we broke below this structure. So now what's going to happen? All right, we come up to previous structure high. So this is actually a little bit of a down move. So this is a downward pattern. Come down. A little bit of a pullback. We break the low, right? And then we come back and retest the low twice. Okay, now I'm going to highlight this to show you what I'm talking about. So what opportunities did we have here? We had, because the market was producing in this zone, lower highs, right, and lower lows. So when the market pulled back to here, this gave us a couple of sell opportunities, all right? Now, of course, the market did pull back in. This is the 1 hour chart, if you're wondering, guys, on the Euro US. So this gave a couple of nice sell opportunities. Previous support becomes next time's resistance, right? Okay, you stop, of course, goes above the high or goes above the previous high, just like here. Okay, depending on the risk reward. If it's the risk reward, if the risk is too much, then you just place it above the candle price action entry to get in the trend. This was a sell trade, so was this, because we'd broken back into this range. This, right? So is that. So if you look to the left, we had highs here, broke back in, this formed a bit of a down move. Okay, so then we broke back above. We got a higher high, did we not? So we got a higher high, right? Back up to this previous high, we broke this high area down here. So it looks like the beginning of possibly an uptrend. Okay, so we're waiting for a retrace to structure, which is right around here. Okay, and did we get it? Yes, we did. And then we got another high. Now, where would you place your stop if you entered a trade here? Like I said, you place it below the candle entry, right? Or below the previous low, right? They're the two options. Okay, now they both work as long as they're using price action for the candle entry. Okay, so if you're saying to yourself, this is going to be where trader's going to buy up, look to the left. And like I said, guys, these are always zones. Support and resistances are always zones. So when you look to the left, okay, we had a high, a high low, and now we have a new high. So let's put that one in. We're back into the high area again. Okay, we've got a new high here, right? And so now we're going to pull back. Where are we going to pull back to? Look left, right? These highs here, these high areas where the resistance was happening. Now it's not exact, like I said, it's a cushioning area. Pushes into it, right? Now where would you place your stop? Either below the candle entry, around that area for price action, or below the previous low, right? Okay, now not always is risk reward going to add up well. So if risk reward doesn't add up well and you don't like it, don't take the trade. Okay, so what happened here? Right, pull back to the highs, these highs here. Price pushes up higher. Right, so let's get rid of these lines so we can be less distracted by these previous lines. Okay, so what's it do? Pushes back up higher, back to the previous structure. Okay, look left. See this structure? So we have a break, which would have been a good target for your trade right here, up to around this high here, which was a risk of, down this previous low, if you did this, like to this previous low, about 69 pips, 67 pips, or if you took it based off the candle, right, okay, would have been about about a 30 pip risk, and you took it up to here, that's 116 pip gain, well, 110 pip gain, just to be able to get filled, right, so it's basically to here, okay, 108, 110, but that area. Okay, so we now have a high, right? Look left, you can see it. So we are still in a confirmed downtrend. I mean, not downtrend, confirmed uptrend. So right? We're expecting, now we take our profit here, right? Now we're expecting a pullback. Now where are we expecting to get a buy situation? Around here. Okay, now for all the price action traders, you're not going to buy here. This is why I was saying to people, it's always best to wait for price action at these pullback zones, right? But this is where you would have been looking. This is where other buyers would have been looking. So we didn't. We broke below it, right? Which is a bearish move. All right, we broke below this structure highs here. Okay, remember these were highs from previous here. So we broke above. Okay, that's a bearish move. So now what do we do? We don't enter a sell here. We wait for a pullback. A pullback to previous structure highs. Market's always telling us what to do, right? So around here, we look for bearish pins, right? I hope you guys are keeping up with this. And if you can, guys, I would definitely recommend pulling out a pad and pen and just writing down what I'm going over here, and also go over the charts and just do this for your own research, right? And you'll see what I mean. This keeps happening over and over again. So this gave a good sell opportunity, okay? So if you're entering off price action, this would have been a good sell signal around here, okay? Right? If you took the signal here, you would have taken a small loss, right? If you just took a small, this would have only been like a 10, 15 pip stop loss, 20 pip stop loss. So you've got this nice good signal here showing that this structure area is being respected, 50 pip risk. And where do we go? We went down to, let's look left, look, always look left. Previous structure lows. Okay? So we got another lower low. Okay? Double bottom, by the way. Okay? So around here, do we start selling? No, we don't. We wait for a pullback to the structure, as always. And if it doesn't pull back, we wait for a pullback after it breaks below here and back to here. So here, we would sell around where? Right here. Look left. Okay? Previous structure high. Remember, we're still down moving. It is consolidating, right? And as long as you're following my rules of price action, locking in a break even on your trade once it gets past a certain amount of pips, past the body, etc., you will always be you'll be more profitable than you are not profitable. Okay, and so this is how you trend trade, guys. Okay, so now let's look at this. So look left. We came back down here. We didn't get a full lower low. We actually got a bit of a higher low. So let's have a look at this. So now we got a high low. We broke above. Okay, so we got a high. Look left. If we look here. Okay, so this was not a buy opportunity here. Why wasn't this not a buy opportunity? Because we didn't have a higher move. You know what I'm saying? So we didn't have a pullback to structure to buy into. And that's okay. So here, we're at the previous highs area. We did get some price action. It's a little bit lower than the previous high, but it did, if you did take that based off price action, you had a good sell. If you structure, look left, here we go. Like I said, structure is a zone. Okay, this area. How do I know this is a zone here? Well, we've got weakness up to this body. As you can see, the body here, body close right here on the 1 hour, gave us the signal here when it gave us the bearish pin bar. Now, if we entered off this signal here, even though it is a little bit lower, sometimes price action is not perfect, as I've mentioned before in previous videos, your stop would have had to have come up here, about 56 pips, right? And so where would you aim here? Here, around this area. Why here? Because this is where you would expect price to bounce, because this is an up move. This is a higher high, right? So you would take profit around here, right? Did we break through? Yes, we did. We broke through, and interestingly enough, and this is what I was trying to show you guys as well, what often happens is when we break structure, we break above the structure, meaning indicating a bearish move. We're breaking below structure, which is right here, looking to left. Then price usually comes back up, retests it, gives a sell signal. And I might zoom out a bit so you guys can see the candles a little bit better. All right, so we get this nice sell. We got this candle, this bearish engulfing candle, and then what happened? Right now, where would we place our stop right here? Well, look left. Probably place our stop around here, right? Market is always giving different places to place stops, and it's always giving different different rules based on how the price is reacting in that time. And so this is one of the elements we have to be as traders. We have to be dynamic to how the markets work. Now, so now we've got a broker of structure right here. So this is a bearish move. So now we're interested in bearish trades. Price comes down here to here, and what happens? We break another bearish bottom. So if you sold here, where would you take profit? Right around here, 130.50. Right? Now, interestingly enough, this is a support zone, right? We know that, right? So if we insert a shape, right, and we draw it in, what happens once it breaks below? Come on, here we go, guys. We come back and test it as resistance. Now, when we test as resistance, market sells off. We've got a nice price action candle here. We got a tiny little pin bar here, and then we got a nice bearish candle that was bigger than the last 1, 2, 3, 4, 5. Gave us a good risk potential to take. Now, where would you place your stop on this trade? Well, depending on how you want to trade this trade, you can place it above, just into the structure, or you could just place it into this zone like this. And this is what I like to do a lot. If you can't find a place to place a stop, you just push it. See how they've got these lows here? So we know that this is sort of a mediocre low area. You know, it's not a strong low area, but we know that price will most likely stay underneath that. And you can also place it just above your candle, give it a little bit of room above your candle, so above this pink zone, so like there. Okay, so now let's keep going. It's better to take more, by the way, guys, it's better to take more losses and have good risk reward all the time, so you can have gain and keep your mental state healthy. And that's what I'm going to go over in the next video, guys, in the price action traders mindset. I'm going to go over psychology, because psychology is one of the biggest aspects in trading. In fact, it was my hardest aspect, and I'm sure you guys are going to relate to that really, really well. So, you know, make sure to stay tuned, subscribe at www.forexreviews.info just to be able to get more and more updates on this series. This series is I'm going to go over pretty much everything I know on price action. So make sure to keep updated. Make sure to subscribe. It doesn't cost anything, guys. Okay, so let's go back to this. All right, so price comes up to retest, comes and creates a new lower low, right? So let's put that one in. Lower low. Ooh. Lower low. Okay, so we got a lower low here, right? We broke this area where it bounced, right? Now, interestingly enough, so what are we going to expect here? What do we expect? We're not selling here. Okay, we're not doing what like the other 80 to 90% of other traders are doing. And you know, on the pullback, they lose their money. What we do is we wait for a retest of, look left. Okay. Okay, so insert shapes. By the way, guys, really appreciating all the likes I'm getting on these videos just recently. You know, it's one way of just showing me that you're actually appreciating the videos that I'm creating. You know, it lets me know to keep creating more and keep the series going. Right, so now we've looked left. All right, this is still a down move. So what are we looking for here? Another down play. We took profit. Oh well, you could have taken profit around here, but it did break below. I mean, this is ultimately when you're trend trading. This is where you lock in break even, right? Because it could bounce. And sometimes, you know, you might take profit if it's nice, you know, risk reward move. And as you can see, like if you entered a sell trade off this candle, the risk up here 34 pips to about, yes, it wasn't a really great risk reward. Bit less than 1-to-1 on that one because it's such a tight little area. Okay, so but it did actually break through and break the lows, and that's usually what happens in a downtrend. So now we've got a new low, which is right here. All right, got a nice where we expected price action to start selling off. We had a nice signal right here based off price action. Let's have a look at this. Okay, we did have some weak, boom, and then it showed that you know, the market really tried to push past this back into an up, to an up move. But you know, the sellers, you know, all in here, you know, the good trend trader sellers, and they just pushed the market back down. We gave us this nice price action, right? Gave us a nice place to place our stop as well, just above that price action, and we could take it down to the next low, right, where we'd lock in, or yeah. So let's have a look at that. Could have either locked in at break even, which we would have been break even on this one if we did lock in, or you could have just taken profit here. But as you can see, the risk reward wasn't great, so the choice was yours on that trade. But I'm just showing you how it's all working. So okay, let's have a look here. So this is now we finally got another break right here. Okay, so let's draw another impulse leg. What I mean by impulse leg is a leg that breaks structure. Okay, all right. So and then, you know, so we got this new low right here, another lower low. So we're still in a downtrend. So we're not doing any trades here. Now remember, these are zones. So let me draw this in. All right, see how I've got all the wicks? So I have to draw it into the wicks. Okay, and we got nearly a pullback to it. It didn't end up happening. Okay, and that sometimes happens. The market just doesn't get back to the thing. Got close. All right, so then we got a new structure low, another lower low, lower low, lower low, and we finally got a move which actually broke above structure support down here. See this? Bing, 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 and we finally got a move that came up here. Now, we broke above, right, and closed above, right, see all the closed candles up here. Then what did the market do? Came down to here, and it gave us a what? A buy trade. All right. So, following the rules, right? We enter our stop below the candle entry, price action candle entry, which you could have used possibly this candle here. It's not too bad. And or you place your stop just below the previous low, or in extension you can even place it all the way down here. Okay, so then we got another impulse leg higher. So we're getting some, we're getting some higher highs. Okay, so let me write that in. And so when you get this habit of doing this, you're going to start to be able to see this on the chart. Okay, and so as you can probably see now, is the retrace to structure, depending on if it's uptrend or a downtrend, is the high probability trade. So we got another retest of structure, okay, right here. Now it could have bounced right here, right? This is a bit of a zone because this is not really a strong structure high, but it is a high high, but it's not a strong one, like it didn't really make it up to here. Okay, and this is expected. We got a retest it here, so it gave us another buy opportunity. Then we got a really strong high high. Now, if we look left, right, this was a previous low. So let's draw this across. And market always respects structure. Always. Okay? So, well, most of the time. Okay, so we've got a high-low area here, right? And if you guys have any questions or comments, just comment below on if you're watching this on YouTube, or just comment, on my post. I'll do a post for this on my site, so you guys can come there and actually post on this specific topic, so we can get a bit of questions and answers for this, because I know you guys are probably going to have lots of questions on this. So anyway, we'll go over that later. Okay, so as we said, we got another high here, and we're testing structure. So this is where we would expect a pullback. Now, if you're just purely trading trend price action, and you're just sticking to trend trading, you can just trade the trend, and you're just waiting for pullbacks to buy into. And so we haven't actually gotten a break above here. So really, at the moment, if the market pulls back, we would expect a buy area around here, or a buy at this previous higher low. Okay, right? So, and unless we violate this low here, we still see this as an up potential move, right? Because this is just a mediocre high. But this is an actual good higher high. So let's draw this one in. Okay. And this is sort of what I was saying in the beginning of the video. I was saying how you can look for over-exhausted areas, like over, places where the market has moved too quickly, too fast, and the market will, a lot of the time, it gives you a nice counter-trend trade. Now, you don't have to take these. You can just follow the trend. You can just stay into the trend or whatnot. But if you do find that you feel like the market has moved high and it's due for a nice pullback, these are the sort of areas to go for. If you look left, right, you got this low here, right, and then you've got this strong low here, and then it makes sense that the market will pull back from that low. Just hold on a sec, guys. I've got an alarm going off. All right. Okay, so just turn that off. So let's have a look at this. We got here, market pulled back again. So this is a bit of a consolidation zone, but we have not violated this low area yet. We only violate if we break below this low. Okay? Because remember, this is a highlight. We were expecting a bounce around here or here. We didn't get price action here for a bounce, so this was not a trade, but we did get price action here back at this high. And you could call this a double bottom area as well. And these are quite really high probability trades. And so we got another retest of the high, right? Came back down, and it actually let's look left, right? Draw it in, and look at that, to the pip, right? So finally we did get a bounce here, bing, bing, bing. Okay, and so structure respected that. It tried to push up higher. It still did stick below this level here, right? So you would have been looking to see if you get a bit of price action on these highs for a buy up from around here, but it didn't end up happening. We didn't get any price action. So we pushed that down, right? And you can see the market's consolidating a little bit. And so we know this is a structure because it's bounced here, all right? So now that we know that if that gets violated down, then it can be a bit of a bearish move. So let's have a look at this. All right. So we move down to here. We're still bouncing off it, guys. So this is giving all good buy opportunities. Like, by the way, buy, well, didn't exactly come down to structure. This one did, though. Gave a nice buy opportunity. And then we finally broke the low. Okay. So now that we've broken this low, where would we be looking for sell opportunities? Well, we'd be looking, let's look left. We'd be looking here for a sell opportunity to come down here. Did it happen? No, it didn't. We didn't get any price action either. So let's pull it up to here, right? And this is the next area where, and this is sort of like a consolidation zone. It's not, the price isn't really trending yet. It is still higher than bearish though, because we haven't broken this low down here. And so we got an expected pullback around this zone. And we didn't get a pullback the whole way. So this probably would have been just a break-even trade, or it could have been a small loss, guys, if you place your stop just above here. And then we got a break out of that level, which is what I was saying to expect if price bounces around here. Now, if I pull this down, you'll see that is in line with these tops. Like I said, these are support and resistance zones. So as you can see, price sort of supported here, came back, and then came back and showed it as support. Bing, 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 right? So this gave the opportunity right here, right? Opportunity here. Now you're probably wondering, if you buy here, where do you place your stop? Well, you can place it below the previous low, which is right here, or the previous, following trend trading rules, the previous structure low right here, or previous low right down here, right, which would mean that it was a change in trend. Okay. Now, I always prefer, in all situations, to go with whatever is best for risk reward. So in this circumstance, like I said, you could place it below the candle or below the previous low. And I like the previous low, okay, because if it comes down and breaks below here, most likely price is going to come back down to here, and I'd much rather have my pips being, working in a different way. Now you can also place it behind, just below the candle as well. That works if you're for price action trade, just for 60 pips. Oh, it's actually less than 60 pips, it's 50 pips here. And where would we be targeting? Okay, well, let's look left. Let's go back. Okay, look, I'll zoom out and make it easier. Okay, so look left. So where would we be targeting for most likely? Okay, so we had resistance around this zone. Okay, so we've got this line here. And it completely brushed past that. You did have an opportunity to probably break even there, So you could have break even there and let the trade go to your next. Ooh, like I said, if the risk reward doesn't line up exact, then you don't have to take the trade either. So anyway, the market broke up and we created another higher low, higher high, right? So where would we be expecting now that we're high above here? We'd be expecting a pullback to this zone again, yeah, right? And so look left, we pull back to this zone, right? This is where the buyers are, right? So structure leaves clues, pull back up to here, all right? Basically the same high again. Then we had one final pullback to this zone, and then we broke above. So these are the buy opportunities. The market is up, we're pulling back to structure, buy, buy. Okay, now when we finally broke above here, what did the market do? Well, look left. This is a resistance zone. So what's the market most likely going to do? Let's draw it in. Where are the buyers going to buy? Right? Okay, look left. This is a buy zone now. Okay? So we're looking for good price action here to buy it up. Broke above. We took our profit if you were trading here, or you took your profit here. Now it broke above, so now you're not buying up here. You're waiting for a pullback to structure and then see what the market does. Comes back to structure, you see it's bouncing, and you've got this double bottom here. This is a nice buy signal right here. Looking left, you're trading the trend, take it up to the next high. All right, so it's a good one, about 1-to-1 sort of risk reward. And like I said, you can just lock in on these trades, okay? But sometimes it's best just to take it to the next high. You'll get that move usually really quick because you're in the trend, right? Okay, so we got a nice pullback to here, to the high, just here. Look left, okay, and then we got a move back down to structure, and then we got a breakout. All right, breakout of the highs. Okay, so here now, if we look left, let's zoom out. Let's see if what this previous structure was. Okay, so it was this structure here. Okay, so this was a support and resistance structure in the past. So when it broke above here, we don't have any price action right here, but you use past data. So where would you expect the price to line up? It would expect to bounce around here, and which it did, right? Now you don't, if you can't see recent price action, some people prefer to stay out of the market. You can do that, or you can be waiting for it to come back down to here, and it didn't do that. But the market does respect past price action, and so as a trader, we have to move with the past, and we need to be able to anticipate the future over and over again. And that's what structured trading is. This is trend trading at extreme level. This is advanced trend trading, by the way, guys. So okay, so now let's have a look at this. We got a new higher high, right? Not much higher, but let's mark it in anyway. I'll zoom in a bit so you can see it a bit more. Okay, new higher high. Okay, so I'll zoom in. Okay, so you can see it is a little bit higher. All right, and you can see that this area was a resistance zone. So let's draw that in around here. Now, okay, so let's have a look at this. Pin, 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 pin. Look left. What happens? Price gets above, closes above, lots of close above candles, comes back to retraces to what was once resistance. Insert shape. Boom. Price action. Now, this market's even telling us where to put our stop in order to be wrong. Boom. Or here. Or below entry, and we got a nice bullish engulfing candle, what I call a significant candle, which would have been a great buying opportunity on this pair. Now, so let's have a look at this. Right, so if you're risking below the candles, we've been risking about 32 pips. If you're risking down here, you would have been risking 63 pips. And you can see there was a 1-to-1 on that, or risking below the candle, it could have been a 2-to-1 trade. And like I said, you know, this is structure, right? The market's giving you clues where to, where you would definitely be wrong, but you can be, just below this structure level. As you can see, it's been bouncing here. Here, I'll draw it in. Right, if you're placing your stop below the candle, give it a little bit of room. As you can see, we've had a bit of press in here a couple of times before, and so you can see that you've had a bit of press in here, and you can see that the market could come down to here and then go up. Okay, so you've got to judge what is your potential risk to reward on this trade. You are trading in the trend, so let's keep going. So that was a good trade. So boom, back to structure. Okay, which is now support, high low. All right, so this is a high low. Price pushes up above this sort of structure area, right? So what do we expect here? Let's draw it up to here. Okay, so what do we expect here? We're either going to get a buy around the structure here. Right, so if I draw this in, we're looking for a buy situation around here. Did we get one? Yes, we did. So let's draw that in. Boom. Right, now it did push through it a bit. Right, that happens. You stop looking at the market. Your stop should be based off price action and what the market's saying. Your stop should be either below this low, right, or below the price action. Right. If you entered on one of these previous candles, then your stop you should have given the stop a little bit more room on that trade, or considering it was so close to this low, I would have put it below this low. And that's the ultimate way of trading these trend trading sort of style, is placing it below the low. Like I said, we're all going to get losses occasionally in Forex. It's just going to happen, right? Can't avoid it. Okay, so we came back to here. Price pushed into previous highs here, and then we got a nice bounce. Okay, for a nice risk reward, risking from, like, say we just took this price action from here just to below here. It's about 47 pips, and the reward was about 67 pips. So good risk reward, like I said. And some people that trade this style like to just do blind trades. You can do that as well, guys. That's up to you. You will get more losses, but at the same time, you will be profitable, because this is the way the market moves. It's called blind trading. It's basically where you're looking at structure and you're going, okay, well, this is previous high structure, so I'm just buying here. All right, bing, bing, and I'm going to buy here, and my stop is just going to be, somewhere in here, I'm just going to put my stop just below the previous low. And a lot of traders do that. That's the common one. People put their stops just below. And why would people put? And if you're probably wondering why would people put their stops below the previous low? Well, if price comes down to here, say price came down and went like this, what is this? It's a downtrend, right? Oh, if it closes below here, okay. Now, sometimes that happens. It does break below the low, and it does close, and it doesn't close below there, and it comes back up. That does happen. Like I said, you've got to accept that some of your trades are going to be losses in order to be profitable in this business. So anyway, let's keep going. All right, so we keep bouncing off this level. Got this high low, and price just keeps doing it until eventually we break higher once again. Now, these are a resistance zone here. So where would we expect price to come down to and then bounce again? We would expect it to come down to here and bounce. Right? So all those people that were trading just blind entries without price action would have been stopped out here. Your stop might have just been into this level here, or it might have just been below this low here, see this previous low they had. And so they would have taken a loss here, and the market did move down. So this is what's exciting, guys, now. Now that we've broken below this low and this low, when I see two lows broken, that's usually the beginning of where I start changing my bias, right? So we're now in a bearish move, right? And so now if we look left, like I said, these are support and resistance zones. Now like I said, they're zones, right? So while it was here before for this high, it had pushed down to these levels. So what happened when it broke below here? Pushes up, gives price action, boom, and then the market sells off, right? And where did it sell off to? Well, interestingly enough, this is a support zone from the past. As you can see, zoom out so we can see it in detail. Oh, let me pull that down because it was a little bit out of alignment. And look at that. Previous, and then, I have traders that tell me, right, and this is a funny one, guys. I actually had a financial advisor tell me that they don't believe in technical analysis. And it's not whether someone wants to believe in technical analysis. It's like believing in whether your heart beats. It's technical analysis is the fundamental, most important aspect of trading, right? Because traders are looking, and traders are based off psychology. They're looking for what did the price do recently? What is what's going to actually most likely going to react in the future? And as you look here, look left, it bounced here. So if someone tells me I don't believe in technical analysis, I just think the market is completely random, well, they obviously have never looked at a Forex chart and they've never actually done any back testing. And, to be honest, they can have their little belief system of not believing in technical analysis and believing that just fundamentals move the market. But it's seriously, guys, as one of the biggest tips, I'm not a financial advisor, but if a financial advisor tells you that technical analysis is radical, not, some sort of, like belief system that, no one should believe in, don't believe them. It works. Technical analysis is just technical analysis is one of the most important aspects of the Forex market. If I could give you a figure on it, I would say you'll be right about around 70% of the time, as long as you can keep your technical analysis in line with what the market's telling you. All right. So try not to focus on fundamental analysis. You will, all the traders I've met in my life that have been good traders that have traded off fundamental analysis have eventually ended up blowing their account based off it, and they always get into this situation where, oh, the market's going to turn around because in the eurozone it's going to be bad. I don't care about. You got to really not care so much about what the news and the media is saying, because I can tell you can be in the worst recession in an area, and like exact example with what's going on in the US. It's just some extreme situations, but guess what? The US is not falling apart. The country is not falling apart. What I'm trying to say is traders don't trade the news. They trade what the charts are telling you, okay? And they follow structure. So I'm probably going to get a bit of flack on that, because I usually get, I've had people, email me telling me that, technical analysis is just a myth and stuff like that. And it's like, okay, guys, well, have fun with your myth, and, let's us make money from trading, okay? So this is how you make money from trading, guys. Follow structure, for if you're a trend trader. And like people trying to argue with whether this is working, I've just showed you over 100, at least over 100 pullbacks of structure, and it working over and over and over again. And occasionally, at times, it doesn't work, but most of the time, it does work. Okay, so let's keep going. Let me just try and finish up this video, because otherwise, it will go for ages. So anyway, point of what I'm going to say, guys, is try not to stress about the concept of fundamentals, okay? It's, Europe might be in the worst case ever, but the euro could keep going up. If the charts keep telling you it's going up, then just react to the charts. And this is what I'm telling you about structure trading, and this is the basis of successful Forex trading, okay? So as you can see, this was a structure support area here. Price came back up to it. This is not magic, guys. This is real trading. Where would you, if you took a sell signal around this pink zone, where would you target? Either here for possibly we're at a double bottom, or if you were believing it was going to continue on its trend, then you would just lock in some of your pips or a little bit above break even, and then let it ride. And as you can see, you've got that next ride. Okay, And so as the market keeps moving down, you keep pulling your areas and setting your alarms to where you expect you can get in on the trend. So in here, where would you expected the market to come back up to? It didn't do it, but that happens sometimes. Sometimes the trend's just too quickly. If that case happens, don't take the trade. Okay, so, and price did pull below here, pull above here. So let's mark that in like that. And right, so finally market came down here. All right, so when it broke below this area, which was sort of a support area, you would have sort of expected a pullback to, here we go. See, okay, let's get rid of this line here for a second. So we've got this nice support area here. Price is up, price comes down, finally breaks below this area that the traders had seen as support. Now this is what happens. Once the traders see it as support and it gets broken, most of the time, and this is 100%, it's about 70% of the time, okay, you guys can do your back testing and work it out yourself, right? It's very high probability. This is the high probability trade. Broken support, sell. Right at this line. Now I'm going to draw it in for you guys again, just to show you, because I know this is probably one of the hardest aspects to get into the habit of seeing. Structure, look left, previous support becomes next time's resistance. And yeah, like, well, that's what, people often ask me, like, do I have losses and stuff like that? Yeah, sure, I have losses, but I'm doing what the market's telling me to do. And just because someone has losses doesn't mean they're not profitable. Like, you can talk to the best traders in the world and ask them, do you have losses in trading? And they'll laugh and just say, of course they do. But they cut their losses early. That's what your stop loss is for. And you hold on to your profiting trades as long as possible. And like I said, if you follow structure and it's trending, this sometimes can work over 15 to 16 times in a row before you'll be stopped out. I'm not kidding, it's very, very profitable. You might have up to, like, the recent run on Euro US, as an example, it had 14 trade opportunities on pullbacks to structure. And I showed this in a previous video with the 1 hour pullback strategy with my weekly chart trading. And you guys can go and watch that video. I recommend you guys actually go and watch that video if you haven't seen it. And I showed all those pullbacks and it had 14 trades in a row, all successful. And then on the 15th trade, it finally broke structure low. I mean, structure low high, like it's an uptrend, right? So it finally came on the 14th trade, it finally broke below, and where you could have taken a loss. In fact, it did bounce a bit, so it could have even been a break-even trade. Now, what I'm trying to say is, like, that's not going to happen every time. Sometimes the market's consolidating, sometimes it's ranging, and so you need to be able to adapt to what the market's telling you. But I can tell you as a fact, when the market is breaking structure lows and pulling back into it, and you're trading the trend, more times out of 10, it's going to work. And like I said, when the market pulls up really, really high as a counter trend trade, and you see structure to the left, chances are you're going to get a pullback around that area. And why would you get a pullback around these major structure highs as well? This is for counter trend trading. Well, because the market this is where people take profit, right? So as an example, let's have a look at this, just in a nutshell. We see this, look left, right? You have this sell opportunity here. This is bounce, bounce, bounce. So why did it bounce here? Well, partly because buyers were buying there, but also because sellers were taking profit. So it's like a self-fulfilling prophecy. And people that say that this doesn't work, they're kidding themselves. Trading is, in a way, looking at the chart, it's like reading. It's like reading psychology. And humans are very, very predictable. It's like understanding Fibonacci's and everything like that. And that's the reason that markets move in these waves, these structure waves. And as you can see, we broke below, came back to retest it, looked left, right? And this works on every chart, every time frame, weekly, daily, 4 hour, 1 hour, half an hour, 15-minute, you name it. I'm just doing it on the 1 hour because I know a lot of people like to trade the 1 hour. and it's, you know, you get some nice moves on the 1 hour, and it works consistently. You know, it's an in-between trading chart level, and you know, a lot of people trade it. So I'm just going to show you this, but you can put this on the 4 hour, you can put this on the daily. Of course, you're going to get less trades. So we broke this low here, so we'd be looking for pullbacks to this low. And interestingly enough, okay, we didn't get a pullback to this low here, but if you pull this down and look at the bodies, right, because we did get an old time low, what happened here? We got weakness right where the support area had, you know, where it had been support and moved up. This is not, like I said, this is not rocket science, right? So we finally got down to here, which was another support area, broke below. So where would we expect this to come up to? Look at this. Look left. Structure low, right here. We're starting to get some lines from the past, so it's being a little bit confusing. Let me get rid of this line. All right. Structure leaves clues. This was the high. I mean, this is the low. So this becomes the high, and then wow, got a really great price action opportunity. As you can see, it was a nice textbook engulfing candle, and this is the engulfing candle that I love. I love this engulfing candle. This one here. Okay, these are the book, and I'm writing a book on this, guys. So if you guys want to purchase my book in the future, it will probably be available on Amazon, and I'll also have it available on my site, of course. And the book's just going to be about how to profitably trade the engulfing candle. That's my favorite bit of price action, the engulfing candle. But it all, of course, it's got to be at certain levels, and here's a perfect example of it here, guys, if you look left. Okay, so I think I'll finish up this video right now. I've shown many trading opportunities so far on this. As you can see, okay, so let me just do this recent crazy bit of price action. So we got down here. Okay, so we would have been waiting for a pullback to around here. It didn't really drop below this area very fast, so we wouldn't have waited for a pullback here. Okay, so we got back, pullback here, and we did get a pin bar here. So yeah, as price action traders, this pin bar here, this little one, could have been a nice selling opportunity, but it didn't end up working. Right, we would have been expecting like that. So that would have been a loss. And then we broke above this high. So as soon as it broke above this high, we had a higher high. And structure leaves clues, look left, would have been looking for price action here, we didn't get it. Structure leaves clues, looking at price action here, no, we didn't get it. Then look left, we would have been looking at price action here. Did we get a sell-off here? Yes, we did. We got some nice bearish price action. Right, so if we take this away, oh, no, we can keep that one there because that's quite recent. Right here, got some nice bearish price action, boom, little trade, pull back to this structure. Right, so let's have a look at this. Boom, boom. No surprise to me and to anyone that is structure traders. Boom, boom. Structure leaves clues. Okay, boom. Was a resistance and support zone. So what does that mean? It's a buying opportunity because we're now looking for buys. It's broken above a couple of structure levels. And this was major news, by the way, guys. And then the technicals. And so this is where the fundamentalists would have been, fundamental traders would have been like, yeah, the fundamentals do work, woo, completely. And then they would have been here going, what do we do now here? I don't know. I'll just buy and hold. That's what they do. Okay, so technical traders, we'd be like, okay, this is a great buying area. We've gotten the confirmation of an uptrend, and it's moving, bouncing, and up here, and we need to break this high in order for this to be used as what? Support, right? So we are testing this area, and so we can just keep buying here, taking profit, keep buying here. We did get a break above what level? This level, okay? This wasn't a strong enough move above, and so we're now above this level. So where would we be expecting a pullback to buy? Around here. And did we get it? Where would our stop be? Either below this low or below the previous low. As trend traders, we put our stop below the low. The previous low, I mean. Because we believe the market's going to keep going up. And to previous high. Okay, nice bit over 1-to-1 there. Okay, so now we're up here. Did the price break above the structure, which is what you expect as trend traders as well. Doesn't always do it. Broke above. Came back, tested it as a support, which is, if you look left, that's the area that I was talking to you about. And then we went higher, pull back to this area, and then we went higher again. And as you can see, look left, support, structure leaves clues, does it over and over and over and over again, guys. And see, we broke above these highs here. Look left, structure leaves clues, pull this down. Okay, you see this? Boom, boom. Price comes down, bounces in this area, comes up, comes back, bounces in this area. Bit of a false break here, but if your stops were below the previous low, no problems. If your stops were below a bit of price action, yes, you could have been stopped out here. It's part of trading, guys. You know, you could keep your stops below here. The choice is yours. You decide how much you're going to risk on a trade. All right. But at the same time, you're looking for good risk reward. And like I said, it's better to take more losses and have good risk reward all the time than it is to risk a lot and then actually lose a good chunk of your account when you're wrong. And as you can see, this just gave good price action. I mean, look, one from the confirmation, 1, 2, 3, 4 opportunities to buy and make profit before you were stopped out. Like, it's not a big deal being stopped out, guys, right? And then boom, and look, it went up. It didn't even, this is a false break. It's just an extension of a break. And if you're following price action here, I mean, you could have gotten in on this trade, this candle here, and you could have had your stop just below here, and you could have just been stopped out. But guess what? It was a false break. We did break above. Ooh, get rid of that one. So the highs are here now. We did break above the high, right? So we could be expecting a bounce here, and it didn't happen. We pulled back in, right? Could have been expecting a bounce there, but it didn't happen. Pulled back in, got back down to here, and then you see the market, and then we actually did break a structure low, so we could have been expecting a buy here. Did we get into price action? No, we didn't get any price action there. So we went back down to previous, so we got a lower low. This is the low here, lower low. All right, so we got the lower low here. So now we'd be looking for retests of the highs to possibly consider selling. Okay, and so as you can see, we got that right here, right around this area. We got a structure here, and we've also got a structure here. Okay, we didn't get price action here though at this low area, so it wasn't a continuation pricing trade. This is actually more just like a test of the highs. So this is a bit more like a ranging trade, guys. Then we got pulled back to here, got some nice price action. Look left, structure leaves clues, so we are still in an uptrend. Boom. Right, boom, sorry. It goes back above this level, which confirms it basically as an uptrend. And then guess what? Look left, structure leaves clues, bounce back into the tops of these support, resistance area, now becomes support. It did push down again, down a bit. That is quite common. Then boom. All right. Well, thanks for watching, guys. I'm sure you guys are going to have some questions, okay, on this trend trading, noticing structure. What I'd like you guys to do, if you've watched this whole video, is, yeah, thanks for watching, first off, guys. But what I want you guys to do is actually just go onto the charts, pull up your favorite time frame. Could be 1 hour, 4 hour, daily, whatever it is. Start drawing in these higher lows, lower lows, and then just start looking for these retests of structure and just going through and doing this. Seriously, you want to train your eyes to be able to see structure without actually having to sift over the chart and just, you know, and have to get lines from other, you know, like trying to take a, you know, what I'm trying to say here is this, is the market is always telling you roughly what it's going to be doing. And so instead of trying to believe what the market's doing, is just reacting to what it's trying to tell you. And, you know, when you're wrong, just take a loss. It's as simple as that. So, yeah, thanks for watching, guys. Like I said, I appreciate all likes. And if you've got a bit of time, jump over to my site, www.forexreviews.info. I appreciate all Facebook likes as well, guys. You know, yeah, all, you know, and all comments are appreciated as well. Well, thanks for watching, guys. If you've got any questions, like I said, just, you know, leave them below this video, either on the post or on YouTube, and I'll try and answer them all. Okay, thanks for watching and have a great rest of the day. Like I said, just before I go, in part 4, I will go over trading psychology, because in trading, it can actually often be the biggest enemy in trading. And so that, just to keep up to date with this video series, just make sure to subscribe so you can keep up to date. Okay, thanks for watching, guys, and I'll speak again soon. Okay, bye for now.